Welcome back to the channel, Crypto Trend Trader, with a quick update on the markets. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, here we have Bitstamp weekly chart, and I'm looking at Bitcoin right now. Obviously, we got that push up. Let me go down to a shorter time frame real quick here, and then we'll work our way up here. We basically got that move down to the neckline like we were talking about, and took profits there on our short position, and we're riding it up here. I was gonna sell into this candle right here, but because we closed above the moving average, I thought, like, honestly, I thought we would sell back off, and basically it would be like a fake out of the moving averages. But the way, matter of fact, let me switch over to this one really quick. We can work our way up to the weekly. I thought this was going to come down here and sell off, and this was going to end up being a fake out cross on the moving averages. But the way it closed still, up above them and everything on the 4 hour, when we got the daily close at 8 o'clock, it still looked good. So I figured I would see where it was going to exactly. But I was figuring it was going to sell off right here. But honestly, at this point in time, I think it's possible we're going to finally make it up to the 200 moving averages, like come way up here into like the 7,000 ranges, and like take out all those stop losses that are like above these wicks up here. Now, I'm not 100% sure of that, obviously, at the time, but based on the momentum starting to build right here, we basically like got the cross, got a decent retracement out of it, and then are now like pulling back to the upside, like with strength and continuation. But again, this is like the situation we were talking about, where when the blue line is on its way up and you're above it, when you come down to it, it's going to act as support. So you see like the histogram comes down and we bounced it and got like continuation to the upside, and then the histogram came down and we got like the green one right here, like started to bounce it, but then it failed and we fell through. And then when we turn it red, when we start coming back to it now and it's green like that, when we come up to it the first time, like when the histogram hits it and it's green and the line's red, we usually get like the rejection off of it. The same way like this would act as support right here because we're above it and it's blue, this would act as resistance because we're below it and it's red. So like that's the idea behind this. So as we come up and approach it, that's a likely area that we would like top out and then like sell back off to. So that's what I'm expecting to happen right now. And then also, like, you see how the knife stuck out right here, and then tells you like keep an eye out for the bottom basically. And then we like get that sell off continuation all through here, accumulation, and then finally we get like the buy. But like we were already obviously like that was already the zone that we were looking out for, because that was the neckline, and we were looking to see if we could get like a bounce, take profit off of that. This is obviously more continuation than I was expecting, but like I said before, I'm still not ruling out the move up here to the 200 moving averages, because I think in all reality that's like where the market wants to go, and it lines up with like key Fibonacci levels. So we'll see how that plays out exactly. You know what I mean? I'm not like 100% in one direction or the other at the time. But now here on the 4 hour, this is what I'm paying attention to, is that essentially like the TJD Fisher transform is basically getting to like our zone where we like to max out, where we hit that purple zone there. Like the red sometimes you'll max out in. Let me pull it up a little bigger. The red sometimes you'll max out in. Right here, and then sometimes you'll max out in here, and that's like averaged out based on like the asset you're looking at, so it's gonna like move that line accordingly. As where like this one, you can move like in the settings, like the purple and the blue, that's like ones that I've added in there. And then you could like add in another one if you wanted, like whatever, but I mean I like how it's set up right now. But essentially what it looks like is going to happen based on that is it looks like we're going to get like our third peak, like that's one green peak, two green peaks, and then we'll get like the third green peak and then sell back off. Now the question is, like, is it going to be, you see how this one where the close is at right here, and then this one is a lower close on the oscillator, it's lower, but in real life the close is like slightly higher. So if we got basically a lower keep clicking the wrong thing. if we basically got a lower close on this, but a higher price, lower close on the oscillator right here, but a higher price close, we could create like a divergence basically on the fissure as well. So keeping an eye out to see potentially if that would come up here, take out these stop losses, get like a confirmed candle close breakout, and then essentially like sell back off. And that's essentially like a liquidity grab slingshot to the downside. And then we can get like the proper retracement. We'll have fulfilled our algorithm to the upside basically, and then we can get like, you know, like the next move after that. And then here you'll see like we are getting the green volume coming in, but what you need to see in this situation is you need to see not only the green volume coming in, but you need to see like the slope right here turn blue. And right now it's still like down and yellow. So like that basically says like, is this trend strengthening or weakening? So the red means it's like selling off strong, and the orange means it's like less strong or it's losing strength. And then the blue means it's like trending in that direction, as with the yellow means it's like still reversing the opposite trend. So right now the green is like reversing the sell-off trend, but we're still overall selling off until that turns blue. So that right there, coupled with this right here, if you're not familiar with the TJD OBV, I highly recommend it. It's a on balance volume. And what that basically means is it takes like whatever asset you're looking at, and it's going to take the candle close, and all it's looking at is, was that candle close higher than the previous candle close on that time frame, equal to the previous candle close on that time frame, or lower? And then if it was higher, it's going to add it on. If it's equal, it does nothing, and if it was lower, it's going to subtract it away. So that's what like the actual blue and purple is right here. So that means there's like, if it's blue, it means there was more buying, and if it's purple, it means there was more selling. So blue means more buying, a lot more buying on that one obviously because it's way bigger slope, and then the purple is like less. And then this green and red is just the average of those. It's just literally a moving average. So then it changes color with slope, so it's easily identifiable when you're looking at it. So what that essentially is pointing out is like, what is like big money doing? What is smart money doing? Like not what are like suckers doing, you know? So as you'll see right here, the selling, like the high volume selling, the big selling starts coming in, and you'll see sometimes a divergence between this indicator and price action, because essentially it's like distribution taking place or accumulation taking place. So you'll see we're selling off all through here, like distribution is taking place, and then all through here as price is going up, it's green, you know what I mean, and we're above it obviously, dragging it up, and then we start getting to the top. This is all distribution taking place again, but this is distribution taking place at the top of the trend. So when that happens, when distribution takes place at the top, you would expect a big sell-off prior to like a reversal of the trend. You're not going to see a bunch of distribution at the top of a trend and then all of a sudden it goes higher. I mean, it's possible, but essentially like that counters the purpose of the indicator. Like the purpose of this indicator is to tell you, is there a divergence between what's happening in price and what's happening in buys and sells. So essentially what's happening is there's more selling taking place than buying. That's why it's going down like that and it's turning red. There's more selling taking place than buying, and meanwhile price is not going down. Now I'm going to go to a longer time frame. Now here we are on the weekly, and you'll see we're still strengthening to the downside as price action moves to the upside, and we're back at that key resistance, testing the breakdown point as resistance. So it's basically like the break and then the retest, and then we're expecting continuation to the downside. And then as you'll see, we were strengthening to the downside right here, but it started like losing strength. But again, you'll see here, you know, there's more selling taking place than buying. So we would expect another spike down here, or potentially move back up and then like a rejection here and then continuation to the downside. But I think on the weekly scale, it's like pretty evident what's taking place right here until we essentially see like the green start coming in and we see it start building, and we start building momentum back on this indicator. You're essentially just trying to catch the knife. Like look through here, all through this area here, as long as it's red and flipped underneath, you know, that's clearly a bearish trend. And then if you just bought into it when it flipped back over, you're in a good spot. And then you'll see obviously when it peaks out here, you know, you have to use other indicators to get out of the trend here. But essentially, like, this is the most important thing, is the actual flip where the trend flips. So here, if you caught this where the trend flipped, that's a nice move. Where the trend flips, that's a nice move. But here, we don't want to get into this until it starts flipping back over, and then we can get into it potentially on the flip, because that's where, like, the money is going to be made on that. But right now, the flip was already made to the downside. We took the flip to the downside here, and that's been great. But that's still going on. That price action is still going on. So it could essentially continue down here. We're right here right now. So you're basically catching a knife. Because how do you know it's not going to continue down here to the average? This is the average where it normally goes down to, based on like previous price action on that time frame. So based on a weekly time frame, look at the amount of times the red histogram or the red comes down here and pokes through it before it gets the reversal. You know, it fell short those 2 times, and then same on the top. Look how many times it goes above it. You know what I mean? So the likelihood of it just randomly reversing right here, I mean, it just doesn't look like that. It doesn't look like good risk reward right there to like be taking a position to the upside right here. This looks more like taking profit off of my hedge to me, and that's exactly what I'll be doing right here. Now, I don't want to jump the gun and cut it short or anything, but I mean, that's basically what I'm looking at this point in time. And then again, we talked about this a couple times on the TJD, TD, MACD. You know, once we get a couple histograms over right here, and it's all red, we flipped over red right here, and we're selling off. We get like that powerful bounce to the upside, you know, but by the time we turn the histogram green, the big move's already done. And again, look over here. It's not even green yet. So by the time we turn this histogram green, the big move's probably already going to be done. So where is that going to be at? Probably at like 7,000. I mean, you know, based on horizontals and, you know, roughly what's going on right here. And then also, you know, we're still continuing to the downside. The RSI is below the Stokes slope, which as long as the RSI is below the Stokes slope, you know, we don't want to be like necessarily in that position unless it's the other way around where the Stokes slope is blue. So if the RSI is below the Stokes slope going down, that's not the position we want to be in. If it's the other way around, then by all means, if it's blue and the Stokes slope's going up and above the RSI, that's the trend you want to be in. And then for the VPCI, we're getting like the 3 green dots, which definitely you know, gives potential. But typically, when this indicator is going to perform the best is when you're in like corresponding to like the other oscillator indicators. So right here, we're getting like the buy, and you're getting the 3 dots. Here you're getting like the 5 dots, and you're in like a massive accumulation zone, like buys throughout. And then, you know, which obviously, look how great that did. And then calling the top too, calling the top over here. I mean, phenomenal indicators. Both these, really all these together. But and then right here, look where you're at. You got 3 in a row, but look, we're not even like halfway down. We're still at 45 right here. We were oversold completely on the weekly in both these other situations. So is it more realistic to think that we could just get like that we're right here, like we just got like that powerful bounce back up, and that we could get like more continuation to the downside? I mean, yeah. Now, do we have to put in a new low? Not necessarily. Not necessarily. I don't think we have to, because this could have just been like exaggerated by the stock market sell-off. You know, or we could get a massive stock market sell-off again, and it could just bust right back down there. Like I said, TA is much less reliable in these like circumstances going on right now. So, but I mean, we'll see. The absolute most important thing, though, I haven't even talked about yet, and that's our monthly getting ready to come in. And I guess we can do that now, where I could do the weekly on this chart really quick too. I didn't do the weekly candle close because it was like already taken care of in the previous one. I mean, we were already in that position. We had taken profits on our shorts, you know, back in the spot, obviously. You know, there was no reason necessarily to exit our position. We hadn't hit any key filled levels or anything like that. So, but basically what I'm looking at right here is, you know, we essentially capitulated down here, found support again on the moving averages, which, you know, obviously, like, that's great. And the massive wicks underneath, that was like confirmation we're going to come back up here. But what, you know, and this just flipped over here again on the reds here. But what really has me second guessing this situation is, look at this on the weekly right here. We have a massive sell-off with a wick on the bottom, an indecision candle, It closed bullish, but an indecision candle. Wick on the top, wick on the bottom. Massive wicks on each. It's basically like a green Darth Maul. Alright, and then look here. A big spinning top with the exact same wick on it, and then close. And now look, here we are trying to take off. Brand new weekly candle. What does it look like we're going to do here? It looks like we're going to come up here to like somewhere in the 7,000 range, and then get another sell-off and get another one of these wicks, and then come down here and either test these 200 moving averages or more realistically close. Well, I guess let me skip over now to the monthly, because this is really what it comes down to. You know, if there's one thing that we know that the market makers in this space like to do on Bitcoin specifically, it's they like to close long time frame candles on moving averages. So in all reality, what I expect to do, the absolute like most simple way to look at it is this monthly candle closes tomorrow. Tomorrow is the last day of the month. 8 p.m. tomorrow, the monthly candle closes. So I think there's a very high likelihood that we are either at 7,300 or at one of these 50s. For some reason, Bitcoin tends to respect the 55 more. So what is that, 4,800? Man, that's so low. 53. So somewhere around either 5,000 or 7,400. And I know that sounds crazy because we're at 6,500 now. That's either 1,000 up or 1,500 down. So what is that, 15% up or 30% down? I know it sounds crazy, but that's what I'm looking at. So I guess if I was going to take a position from right here and we were going to say 15% up or 30% down, I would take the position to the downside because that's 2-to-1 odds. So if it's a coin flip, 2-to-1 odds, and I was going to flip, you know what I mean? Just literally like TA all aside, just saying like, statistically what I think is going to happen is it's going to close on one of these moving averages. It loves these moving averages. So, and maybe it doesn't move that far, but I think there's a very high likelihood that our monthly is going to be closing either right here at 7,400 or right down here at like the 5,000. And now look on the monthly chart, we got our first red dot way back here. What was it? It was this one where we got the sell off and then came back up. That was our first red dot on the monthly. And look how long we sold off for. And then we finally took it out. And now look, we got our first red dot on the monthly. And I mean, maybe you could say, that's Black Swan, but I mean, it's TA. So you gotta respect the TA regardless of what causes it. I mean, the news and the charts, and we got to be able to you can only rely on one of them. You can't rely on the news. We know that. So I think we should rely on the charts. And now looking at this right here, we're getting a strong, basically sell-off of the blue here. But is it possible that this hits the purple and gets a bounce? Yes, by all means. It happens very often. We get that bounce. But, I don't know. Man, I want to get bullish on this thing, but it's just too soon. This looks more like, to me, like a retest. It looks like we're coming back up to try and retest it. And by all means, the reason of a retest is to see, can the market, gain enough strength to move back through. So maybe we do move back to the upside, but I can't get bullish until we're over this 7,000 mark. And in all reality, based on what we're looking at with the monthly, I really can't get bullish until we're I guess 72, 7,300. And even then, I'm skeptically bullish, but at least comfortably taking positions to the upside. But at this point in time, I mean, I would have to be more inclined to to take positions to the downside from here, because to me, essentially all this is just, I mean, basically you could see what it is. We were looking at that Adam and Eve, the sharp, and then the rounding. And then, we obviously took profits on that down here like we were talking about. Went back in a spot, or uncovered our spot positions, I should say. And then we take profits into spot and into cash, So then we get the bounce up here. But, I mean, the main areas we take profit, we took some at 0.5, but the main areas we would take it at are 0.5 and 618. And now here we are, done and still showing strength. I don't see any reason at this point in time not to. So I think in all reality, the best thing to do is just keep trailing your stop up. As we move up to the next fib level and like confirm candle close above it, I'm just going to be moving my stop to just below like the previous fib level. And then when the market decides it's done, it'll take me back out of that position, and recover me. Because in all reality, I mean, we've got a nice move up here. This is a counter trend trade. We're overall in a downtrend. So this is a nice move up here. We're back to the 618. We're back to the 382. I mean, our next target's going to be this 786 right here. Our next target's at 6726 and then 6900. And then if we make it over that, obviously, we're taking out like the previous swing, and then at that point in time, like, those are invalid anyway. So, but in all reality, I mean, what could we come up here to the 1.618, 7700? Yeah, I definitely think so. That would be like the retest of the breakdown right here. Now, again, I don't want to get overly bullish, and I don't want other people to get overly bullish, but, we've been talking about it this whole time that in all reality, like, once one of these algorithms is dominating the market and it's like the market moving, like, essentially program, it wants to, like, fulfill those targets. And, I really think, like, it was essentially trying to fulfill that target, and then, kept failing. And this maybe the third time will give us, like, the strength to break up here and then essentially like tag the 200 moving averages. But again, we're starting to get to the areas where we could see this potentially like rolling back over. We are at a crucial point, and coming up on the monthly close, I mean, we could see like massive action coming in. So it's actually very exciting. So at this point in time, we basically just want to keep our stop losses in place, make sure we're in like comfortable positions, and that we're set up for the big move if it does happen. And a lot of times if you're it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. A lot of times if you're unsure about market conditions or you're newer into a space but you're overall like bullish on an asset, whatever it is, wouldn't necessarily recommend it in a downtrend, but if you're just convinced that at some point in time Bitcoin's going to like 100,000, then it doesn't really matter in the meantime. Like, you might want to do some trading in between, but if you're overall bullish on it, by all means, if you just want to hold it. But essentially what you can do is just hold your asset, like, hold your coins on or off the exchange. I recommend off an exchange in a hardware wallet, like a ledger. But hold your coin. Say you got one Bitcoin. You hold that Bitcoin off exchange, safe somewhere, and then you use a leveraged exchange somewhere else to cover your position. So if you think price action is getting ready to go to the downside, you could short that one Bitcoin on another exchange with like, a 5% stop loss or whatever it is. And then if the price moves in your favor, as your Bitcoin goes down in value, you gain that money on your short in cash. But in the event that the price starts going up and we break through like a key resistance level and start moving to the upside, you'll take a small loss on your short position in dollars, but you'll still have the same amount of Bitcoin, and then you don't miss the move to the upside if it's like an abrupt move or something like that. So it's like a good way to basically like, cover yourself if you're at like a key resistance or support and you're just not sure like the direction it's going in. But again, I wouldn't recommend like any trading for any novices. I think you should spend your time and money on like education over trading. There's a reason most people lose their money early on. Um, you know, they really don't know what they're doing. Later on, if you spend the time and put in the work, you're gonna end up like statistically taking good trades. So in all reality, it's up or down as long as you're not getting chopped up by stop losses. Like, if you're taking high risk or high reward, low risk trades, with basically a 50% chance to win, you're still going to make money over time, because every time you lose, you're losing less than every time you win. So if you're winning and losing an equal amount, but you're winning more when you win than when you lose, you end up with more in the end. So, but yeah, I mean, coming up on the monthly, this is it, guys. We're at a big swing in the market. We're at a resistance. Keep in mind, we broke down through the resistance and we're retesting it as support. Keep in mind, the entire world economy is shut down. And, although quantitative easing is, in effect, those things do take some time. So let's not get overly bullish right here. I hear all these people in the space again getting overly bullish, and I just don't think it's time yet. I think it was okay to get overly bullish at the bottom. I think it was okay to get a little bit bullish right here on the retest of the neckline, like we did taking this trade. But I don't think we should get reckless right here. I think this is like basically like the take profit areas, and you know, we should be trailing our stops and looking for the next big swing target. So there you have it, guys. Crypto trend trader, and I'm out of here. Oh, you know what? I wanted to check out Monero real quick. Somebody had asked me. It's been a while since I looked at this. Alright, Monero on the weekly. Man, that's rough. I mean, honestly, like, you know, when we took out this low right here, that's a tough spot to be in. And then you're essentially, it's like the same situation. You're coming up on that same resistance. It looks like Bitcoin just like, honestly, it looks a lot like Bitcoin, because basically you had a nice uptrend, you came down, capitulated through, you put in a lower high, you know, sold off, came back up, put in a lower high for a third time, capitulated down, but then you took out that low, as where Bitcoin didn't take out that low. Bitcoin did like one of these guys who were put in a higher low. You took out your low. So, you know, this is honestly at this point in time, there's no reason to get like bullish on this asset. If you were going to get bullish, you could have took like a trade off the knife, but we just flipped this over negative. We just flipped that over negative. We're in a confirmed downtrend. We're under all the moving averages. As far as the daily goes, you know, it's possible here that we consolidate and get a bounce up to 54.47. So, I mean, that's definitely a tradable move. It's like almost, it's not 20%. It's like 15 to 20%, somewhere around there. You know, so you could definitely potentially get that move up here. But I wouldn't get greedy on this one. If anything, I mean, I guess realistically, it's possible. If you were going to get bullish, you could get a move all the way up to like $62. But I wouldn't get overly excited on this one. You really got to just see what Bitcoin does. And then if Bitcoin closes bullish and starts looking good, you can look to the alts for, you know, for like the exponential gains. So I'm going to pull it up on like the long time frame. Yeah, see, I mean, so you basically, like, on the monthly, you got bought up to that same level. So realistically, like the way XMR looks right here, Monero's, it looks like it's going to close the monthly at $43. Because again, like these things like to close like at like moving averages or at like resistance support areas. And this is a key monthly support right here. So I would expect Monero to come back down here to like 42.50 and see it close right there and then kind of see what happens. But I mean, the alts could look weak and then Bitcoin could be strong. But I mean, look at this monthly downtrend. You know what I mean? You basically have one push up here where you broke above it. All you did was just come up high enough to take it out and then sell back off. So, I mean, you're still in a clear monthly downtrend. I mean, if you're still in this thing, you know, you might as well. I mean, I can't even give anybody advice or anything. Not that I would, but, you know, it's a tough situation because it's like, what do? Do you cut your losses or do you just, like, forget about it? And it's almost like, you know, if you bought anywhere in this area, you know, I definitely wouldn't sell now because you're at, like, support. You could probably bounce back up here and get back out at the moving averages potentially. But, you know, did you just miss your chance to do that? Yeah, probably. Probably. But there you have it, guys. Crypto Trend Trader, and I'm out of here.